Hi, welcome to your carrier update brought to you by PowerFleet. I'm Mike Vincent. He's Zach Strickland. There's only blue colors out there, so I'll be able to keep my attention on the numbers.
Focus like a laser.
Like a laser. What's going on, my friend?
Tender rejection rates moving horizontally for most of the month of September. We had a little Labor Day bump here, but the overall trend has changed. We were coming down through, since that early March level where we were up around 28%. Then that Easter spike, strangely enough. But overall trend had been going down until the early part of August. We came up through August, and now we're straight line plateau almost.
Straight across, sprinting towards the holidays.
Exactly. So 22.4%, slightly up, about 1% higher versus this time last week. So not a lot of change. It's almost imperceptible to people in the market.
It really is, yeah.
So let's look at the outbound tender volume index, take a quick look at the demand side indicator, and a totally different picture here in terms of trend. I mean, if anything, we're actually seeing increasing tender volumes. Again, total tenders here. So these are the number of requests in an index form, in this index. So requests staying relatively flat through most of this period of time since March, except we've actually had a little bit of an upward trend.
But it's relatively flat because when you see the holiday peaks, it kind of makes you visually think it's flattened out. But you've got an uptick from here, all the way.
Yeah, no. If you draw the trend line, and it's certainly,
the trend line is still up.
It's certainly from
end of August. Yeah.
It's coming higher. So total demand still extremely high. Not a lot of deceleration here. So there's plenty of freight to move. Let's see what kind of freight it is though in our next chart.
Oh, okay. Wow.
This is the part that's changing. This is the big change. This is where in the blue line and the green line, these are loads that move less than 250 miles in total. So this is your short haul volume. It does not have the same impact to capacity as the stuff in this pink line and the purple line do, which is the stuff that moves over 450 miles in length.
Yeah.
Our tweener and long haul volume stuff has come down year over year, roughly 4% in the tweener side, about roughly flat in the long haul volumes, but they are starting to pull back higher. If you come back to early August, long haul volumes are starting to pick back up.
Yes.
They're still relatively similar to year over year volumes, but we're starting to see that pick up again, which again drives that rejection rate higher because a lot of what we were talking about with that Los Angeles ships. A lot of long haul freight.
Sure, there's a lot of long haul freight. But this mix makes sense because your short haul and so on, that stuff is relative there, and it's up. So that is really accepted quite a bit.
Yes, it's accepted.
The one that's rejected the most is down 4%.
Exactly, tweener. So
the tweener.
That accelerates, to your point, that accelerates that rejection rate.
That's why you can have more volume, but O-try or tender rejections or acceptance rates stay high and rejections go down.
Exactly. So let's look at the map and see where in the United States we're seeing some sort of volatility or movement.
This is the weekly?
This is our weighted rejection index. So this is something that we use to look at near-time volatility in the market. It combines volume with weekly change in tender rejection rates. Anything in the blues here showing tightening week over week. Anything in these oranges or reds, loosening week over week. Hot market of the day, ironically, since it's in blue, the Charlotte market showing to be one of the most significant upticks in overall tender rejection rates combined with their volume, as well as Allentown, Pennsylvania, up there. And this is an interesting corridor. You see this kind of trend emerging across the upper Midwest and Northeast and down along the coastline. Not as much, everybody's running out to Los Angeles.
Yeah, that's right.
We've seen this seesaw battle with capacity. So,
bing bong.
Yeah. Charlotte, a very backhaul market, typically very consumer-oriented. More freight coming in than leaving. You've got to drive. You've got to deadhead out of this market. So when this market starts to show up blue, it's a little bit alarming, to say the least.
Yeah, well, all the freight, everybody's going to grab that long haul.
Everybody's
making that money.
They've priced themselves, out of this market.
Yes.
So they're running to go get the money. There's not a lot of money going on in Charlotte, and especially when you talk about North Carolina region. Let's look at the tender rejection index chart of this market. The Charlotte market combined with some of the other markets of interest. We've got Allentown and Chicago here as well. So Allentown rejections in orange, Chicago in green, showing an uptick. That was in blue on that market. But yes, look at Charlotte right here in the blue. Just a huge spike last week, and it's the highest value since July 4th.
Wow, so it's moving, yeah, and it was on a little bit of an uptick there, but then it just grabbed it and went.
Yeah, it just took off. So I mean, the overall trend is kind of slightly up over the last few months, but shooting higher. And again, anybody operating out of Chicago, look at this trend line. Chicago's been relatively
since mid-August. It's been going up there pretty good.
All three of these markets operating at tender rejection rates above the market average, or the national average, I should say.
Yeah, yeah. And Charlotte obviously gets affected by that Atlanta market, which the volumes are really, really high. Excellent stuff. Thank you so much, Zach.